Okay, this week's real estate and mortgage rate update. Let's jump into the numbers here. So 30-year fixed rate mortgage, national average 6.77. So we're moving in the right direction. Again, the volatility continues. As I mentioned last week, a lot of this was going to depend on the different trade deals that are starting to be announced and what impact the market kind of expects the tariffs to have on inflation. And speaking of inflation, this remainder portion of this week, there's a lot of really big market moving updates from a news standpoint. So tomorrow we have ADP payroll, which gives us a little bit of insight into the Friday's job report. So we're going to see, if there's how many jobs were created in the private sector here. And then another big one, obviously, is going to be the Fed interest rate decision. And then where things kind of unravel, the Fed, the Fed interest rate decision in and of itself, oftentimes is baked in to what is anticipated. But where it sometimes goes off the rails is when the Fed starts taking questions during the Q&A, and he doesn't have the best diplomacy around what is market moving ways to answer those questions. And so things can unravel at this point in time here. So we'll keep our eyes on that. Thursday is huge. This is the Fed's favored inflation report, the PCE, or personal consumption expenditure. And so we're going to get that on Thursday. And then, as I mentioned on Friday, we'll get the Bureau of Labor and Statistics jobs report, which will give us some insight into the unemployment rate and what kind of job creations we saw in June. All that said, here's what mortgage rates are doing. We had some softening in the jobs market based on the JOLTS report, which is job openings and I forget the other part. I'll maybe include that in the post on Facebook, but it gives us a little bit of insight in kind of how soft the market is. And so that helped out mortgage bonds today. We did climb all the way up here, which looked to be real favorable because, we broke over this ceiling right here, and there's a lot of upward room. It pulled back down at market close, and we're kind of in this real tight range right here. Hopefully, the news is for sure going to provide a direction. Hopefully the direction is up and not the other way here. When we look at the 10-year Treasury, and I haven't talked a lot about this because the spread between the 10-year Treasury and mortgage-backed securities has widened, and it's less predictable than just looking at mortgage-backed securities. Now, they'll track similarly, although it's inverse to mortgage-backed securities. In other words, red and down is good for mortgage rates when we're looking at the Treasury. And so you can see we had significant movement and kind of pushed through this floor of support here. So, there's a lot of room down here before, there's another floor of support. And so, depending on how the news goes the remainder of this week, we could see some mortgage rate relief. We'll stay tuned, and I'll update on all of these releases here in the next update. All right. Thanks so much.